In this video we will teach you one of the easiest and consistently profitable trading strategy that exists. My mentor once told me that if you can't explain your trading strategy to a 10-year-old, then you are doing something wrong. What he meant by it was that your trading strategy should be very simple and easy to implement. There is an old saying, trend is your friend. What it means is that the best and the only way to make consistent profits in the stock market is by trading with the trend and not against it. In order to visualize a trend, we use a price action approach called market structure, which basically is that when the markets are in an uptrend, the price will print higher highs and higher lows. When in a downtrend, it will print lower lows and lower highs. We use trend lines to better visualize this. A trend line is a line that connects at least two swing points of a trend. In an uptrend, we connect the lows into an upward sloping trend line, and in a downtrend, we connect the highs in a downward sloping trend line. A break of the trend line signifies a possible change in the direction of the trend. Whereas if price takes support or resists the trend line, then it is considered as a continuation of the trend. We don't just enter blindly whenever price breaks a trend line or takes support or resists it. We always wait for confirmation with price action. Waiting for confirmation helps us avoid bull or bear traps. There are multiple ways to confirm price action, like using candlestick patterns, price patterns, confluence, or top-down analysis. What I prefer is a combination of some of those. Here in this example, you can clearly see the price is in an uptrend. Once the high is formed, price forms a lower high and breaks the upward sloping trend line. After the break, it starts forming lower highs and we draw a downward sloping trend line to mark the downtrend. Notice the reaction where both trend lines intersect, which is known as confluence. Price has given us three confirmation that it wants to go down. First is the break of the upward sloping trend line, second is the confluence, and third is the outside bar it forms at the confluence. Here in this example, we can clearly see that the Dow Jones is in an uptrend. It is also getting support at these levels, as evident with the large wicks on the downside. We have a confluence of support and an upwards trend line, but the first time it touches here, it forms another wick and the candle close is not below the trend line. The second time the candle closed below the trend line, giving us three confirmations to enter into a short position. First is a trend line break, the second is the close below the support, and third is the large candle body indicating selling pressure. In this example, we can clearly see an uptrend on the daily chart of Bitcoin. Once the upward trend line breaks, we can start looking for confirmations. We use top-down analysis and check the 4-hour chart and notice a support level that exists right at the break. Before taking the short, we need to confirm if that support has turned into a resistance. That is confirmed as the price retests those levels 3 times but is unable to break above it, thereby giving us a perfect signal to enter into a short position. As you can see, the trend line trading strategy can be a powerful tool when used correctly. There is a certain level of subjectivity involved while using trend lines, but when we use it with other confirmations, it can not only remove the subjectivity but also give us precise entries with a very good risk to reward ratio. What is even better is that this strategy is so easy to use that no matter whether you are a pro or beginner, you can use this strategy to trade the markets and make profits consistently. If you liked this video, then please subscribe to our channel for more.